Hi there, welcome to Kneppy Invest. Is it any surprise I just had to do a video on the Megaport? Share price on the 30th of January 2024 has rallied 28%. I'm pretty sure the share price is up 27.7% or something like that. And this on the back of the company releasing their Appendix 4C for the December quarter. Now, one of the main features about Megaport is how volatile the share price is or can be when the company releases their Appendix 4C. Last quarter, the September quarter, share price was down something like 18%. This quarter, it's up 27%. And to be honest with you, there's not much difference between the September quarter and the December quarter. And probably the most important thing about Megaport right now is if you go back maybe 1 or 2 years ago, whenever the company released their Appendix 4C, the market would punish the company. You'd see the share price fall a fair bit in the one day. Now we are seeing the exact opposite. More than likely, the market is going to reward this company when they do release their Appendix 4C. And to be honest with you, it's for obvious reasons, which will become apparent when we have a look at it, particularly when it comes to operating cash flow, even free cash flow. So the market loves Megaport right now, and the share price has closed at a really interesting level. And to be honest with you, I'm not surprised at all. The share price is up 28%. And you'll be able to see exactly what I'm talking about when we look at the chart. Now, for those who have no idea what this company does, they are, well, their software-defined network, which is called an SDN, connects 700 plus, maybe 800 now, enabled data centers in over 20 countries across North America, Asia Pacific, and Europe. They enable customers with on-demand connectivity to cloud network and managed service providers. Their network as a service solution offers greater agility, reduced operating costs, and increased speed to market compared to traditional connectivity options. So did that all go over your head? Well, whatever they're doing, it is working right now. You'll be able to see that just by looking at the numbers. And also, the market likes this company. Now, the market cap of this company is well over $1 billion now. I'm pretty sure it is. Anyway, so let's have a look. Now, before we have a look at their Appendix 4C, just to show you how volatile the company's share price can be when they release an Appendix 4C, let's have a look at some of my titles of previous videos I've done on this company. So last quarter, down 16%. September quarter to financial year 2023, down 31%. This was probably, we're getting to the point 1 year ago, just over 1 year ago, when there was maximum negativity around this company. But some quarters are really positive. So the June quarter financial year 22, share price up 23%. In fact, the June quarter of last year, the share price was up about 33 or 34%. In fact, I took a trading position at that point in time. So don't be surprised when you do see a lot of volatility in this company's share price whenever they release Appendix 4C. For some reason, the market is always surprised either to the downside or the upside when the company releases their quarterly results. So let's have a look. Actually, before we have a look at the December quarter results for the current financial year, let's go back to December quarter results of last year. Also have a look at the September quarter results, and not much difference between the two. A little bit of subtle differences, but not much differences. But if we go back 1 year ago, receipts and customers 23.6 million, but the company was not operating cash flow positive. In fact, they were negative by 1.6 million. And at this point in time, the company was still burning through a lot of cash. So cash on hand fell by about $5.7 million because not only were they burning through cash in operations, they spent money on capital expenditure in this quarter, 1.3 million, $2.9 million on intellectual property. They also increased their borrowings by 1.3 million. So overall, cash going down, the company burning through cash. The market didn't really like this company at this point in time because they were not profitable, that sort of thing. And back 1 year ago, 1.5 years ago, the market loved companies, tech companies that were profitable, and they absolutely hated tech companies that were not profitable. So the company had to make that transition, and they did make this transition in calendar year 2023. So let's go back to the September quarter of the last quarter, and the share price fell 16% on the back of these results. And just compare these results to the most recent December quarter. You can see what I mean when I say Not much difference between the two results, subtle differences, but not much differences. So, so last quarter, $47.9 million in receipts, so significantly a high amount of receipts than the December quarter in financial year 23. And the company was operating cash flow positive by $10.7 million. And because they only spent $3.4 million in capital expenditure, $2.5 million on intellectual property, this company was free cash flow positive by a fair bit. And that means that a lot of that operating cash flow fell to the bottom line. Not all of it, some of it fell to the bottom line. So the company, instead of burning through cash, is now generating cash. Cash actually on hand increased to $55.2 million. Yet the market hated these results. And one of the reasons the market hated these results is because, if I remember correctly, the market thought the company had stopped their growth trajectory. And for some reason, the market 3 months ago hated the thought that maybe Megaport was not growing as quick as it had been in the previous few years. So market punished Megaport, share price down 16%. Now let's have a look at the December quarter results for financial year 24. And here we go. Now, receipts from customers up a little bit, about $4 million from the previous quarter, up $28 million from 1 year ago. And the company operating cash flow positive now by $15.2 million. So a little bit higher than the previous quarter and significantly higher than 1 year ago. So we've gone from being, this company's gone from being negative operating cash flow to positive operating cash flow to the tune of $15.2 million. So this company has definitely hit that and gone way past that inflection point, a very important inflection point of generating cash flow in their business. And this is really important for a company, every company in the world, because at this point in time, when a company can generate cash flow in their business, whether it's operating cash flow, particularly free cash flow, that means the management of a company has much more flexibility. They have more decisions to make on what to do with that cash flow. So in the previous edition of this company, when they were burning through cash, they didn't need to make any decisions. Now the management of this company needs to make some decisions. What are they going to do with the cash flow that is being generated in the company? Are they going to do a share buyback, give their shareholders a dividend, or are they going to spend the money on future growth, or maybe even acquisitions? Don't know. And that is the role of the management of a company. In fact, capital allocation decisions, in my opinion, is the most important job of the CEO of a company. You might say creating a culture or maintaining the culture of a company is quite important. But in my opinion, it's capital allocation decisions. Bad decisions can destroy a company. Great decisions can see that company go from a market cap of $50 million to $10 billion, just like Pro Medicus did back about 10 to 15 years ago. And I might do a video on that. A great capital allocation decision back about 2011. It was just buying something which turned out to be really well. Anyway, so receipts up 28 million and receipts up 28 million. But when you look at the increase in costs, and this is the most important thing, they have reached a point where they have operating leverage and scale, because receipts up 28 million, but all the spending is only up about 11, 12 million. So there's a difference of $16 million or so between receipts increasing and costs increasing. That is leverage. They have hit the point where they should be able to generate significantly more cash if they continue to grow from here. So if they increase their receipts, or say their revenue by, say, $10 million, possibly they should increase their profit by a significant amount. So they've reached that very important point in their life cycle. Megaport has. Anyway, still spending money on capital expenditure, 3.6 million, intellectual property, 2.1 million, but I don't mind that right now because they are generating cash in their operations. And for some reason, they increased their loans by $1 million. But when you do look at the interest received or interest paid, not much difference between the two. So interest received 108,000. So they're actually receiving more interest than they're actually paying for, maybe. I don't know. That sounds ridiculous because they do have a little bit of debt, but they also have a lot of cash on hand. Now to the receipts history of the company. And the first thing I always look at when I am researching a company is the trajectory of receipts or revenue for Megaport, because they do release Appendix 4Cs every quarter. It's the receipts history. And this is a brilliant receipts history graph. This is exactly what you want to see. Receipts going up through time. Now, it's not absolute in a straight line going up. There is a little bit of lumpiness there. You can see a bit of a downturn in receipts back in late 2022, start of 2023. But if you just ignore that, receipts are going up in a straight line. One point in time a few years ago, I thought receipts were accelerating, growing exponentially, but not really doing that. But they're still going up at a fairly consistent rate. This is exactly what you want to see for any company, receipts or revenue growing through time. Now, I'm just going to look at and talk about the key metrics, and they have changed this table from the previous quarter to this quarter. Now, this could be a red flag if you were being a little bit picky. So, in last quarter, the September quarter 2024, so 3 months ago, they included quite a few key metrics, including ARR, revenue customers, ARR per rest customer, total services, customer ports, VXCs, MCR, and MVE. And maybe one of the things that did freak out the market is some of the quarter-on-quarter changes here were not much. In fact, customers' growth was 0% quarter-on-quarter, and MVE was negative 1% growth. So I think that's one of the reasons why the market did freak out when the company released their Appendix 4C 3 months ago. So let's have a look at the key metrics for the most current quarter. And you can see a little bit of a change in what they are looking at. And when I say change, I'm talking about they're not looking at some of the key metrics they were looking at 3 months ago. So they're focusing on customers. So they're not looking at annual recurring revenue or annual recurring revenue per customer. So customers, total services, ports, VXCs and IX, MCR and MVA. And if you look at the quarter-on-quarter change, everything's positive, and MVE is up 23% for quarter-on-quarter, and year-to-year change or year-on-year change up 130%. I tend to want to focus, this is just me personally, I like to focus on the year-on-year change, not quarter-on-quarter change, because quarter-on-quarter change can be or is more likely to be lumpy. You're more likely to see one quarter to be a little bit disappointing. So if you focus on the year-on-year change, that's the best indication of how a company is growing. And customers up 7%, total services up 12%, ports up 8%, VXCs and IX up 14%, MCRs up 21%, and MVEs up 130%. So the company is still definitely growing when you look at the year-on-year change. Now let's have a look at the chart. And this is a daily chart going back a few years, in fact, to February 2022. Share price in a well-defined downtrend. A lot of negative sentiment around this company from 2021 all the way through to around the middle of 2023. Share price, in fact, in the middle of 2023, not quite the middle, around about May or so, share price was as low as $4, maximum negativity. In fact, you do see a spike in volume just before that sentiment started to shift from highly negative to positive. And that was in May. And then there was one day, I forget what the company released, but they released some positive news. That was like at the end of April last year. It must have been a good quarterly result. Share price rose on the back of that, and the share price has continued to rise after that. So it seems like the April quarter report last year was a catalyst for a shift in sentiment. And that's where we did see the highest volume coming in, and the share price has continued to climb. We saw a nice little spike in the share price in July, up about 30% or so. That's when I became interested in trading this company. And then the share price fell 60% in October. Now, when you do look at what happened after October, there was a little bit of weakness in the share price for some reason. And then the company released this particular Appendix 4C. Share price rallied 28%. And the share price closed at around about $12.50. Not only did the share price close around about $12.50, I think it was $12.48 or so, the share price for most of the day was going sideways at around $12.50. I'll show you the 1-minute chart in a second. Now, the reason $12.50 is important is because if we go to the highs back in August, we saw the share price struggle to get above $12.50. So $12.50 is a really natural and a fairly strong resistance level for Megaport. So traders know this. Even subconsciously, a lot of non-traders would know $12.50 is a significant level for Megaport. And that's why today, even though we're only talking about 5 hours of trading, the share price of Megaport struggled to get and remain above $12.50. So let's have a look at the 1-minute chart. You'll be able to see what I mean, how $12.50 is an important level for this company. This is the 1-minute chart for Megaport. I like to look at all sort of time frames, that sort of thing. And 1-minute chart is interesting. So we're sort of in the realm of day traders, that sort of thing. Now, the share price of Megaport opened up at $10.70. I put a bid in at $10.50. My bid at open or auction was not met, so I then did take a position in Megaport, a trading position, a few minutes later, maybe up to 15 minutes later. And you can see the share price rallying from 1070 to 1250 in the first 45 minutes of trading. And the reason why the share price is rallying during that 45 minutes is simply because demand and supply. There's more demand for shares than there are supply of shares on the market. And because there's more demand than supply, share price is rallying. And the share price rallied all the way from 1070 to 1250. So what's the significance of 1250? Well, go back to the previous chart. 1250 is the previous high we saw back in August 2023. And again, investors know that. Well, maybe not investors, but definitely traders, and subconsciously some investors know this. So they think 1250 is an interesting level. So I might sell some shares at 1250, take some profits. And so at 1250, you're seeing extra supply of shares coming on market. Now, more importantly is when you do see extra supply of shares coming on market, you need that not extra demand, but you need to see remaining demand. Because if that extra supply overwhelms the demand, that's when you see the share price significantly fall. But we did not see the share price significantly fall for Megaport during the rest of trading. In fact, you see the share price oscillate below and above $12.50 all day, which is telling me demand and supply during the rest of trading on the 30th of January was fairly equal. Now, it's going to be really interesting to see how the share price and the market reacts over the next few trading days. If we see the share price get above 1250 on its strength, that's a very bullish sign that the bulls are in charge of this company, and that's extra supply of shares on the market has been depleted. And that's how you get the share price to rally when demand overwhelms supply. So that definitely could happen over the next few days. Another thing that could happen is if we continue to see supply of shares on the market and demand starts to waver, starts to decrease. And that's when we might see the share price fall a little bit for Megaport. In most of these sort of situations, typically the bulls win out over the bears. Not all the time, but I would be bullish, or I am bullish on Megaport right now. And a possible trading strategy for Megaport, if you're interested in that sort of thing, is just taking or putting it a bid in just above $12.50 and just maybe not hope, but expect the share price to go on a rally from here. And if the share price falls below $12.50 and remains below $12.50, you just sell at a small loss. And that's all I have for this video on Megaport and the December quarter financial year 24 Appendix 4C. Share price up 28%, I fixed it. Up 27.7%, I believe. So if you have any thoughts about Megaport, this Appendix 4C, anything at all, just leave your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.